Hey everyone, how's it going? It is 1 p.m. We just got the closing bell for Thursday, August 29th, and we had a pretty exciting day. We started out largely shrugging off the Nvidia earnings. Let's take a look at this. This is QQQ. Let me look at SPY. But we were down yesterday in this SPY, and then after hours, we continued to trade quite a bit lower. Then suddenly in the pre-market, we were a bit higher. So sometime most likely during the European session, we started to trade a lot higher. And then by the time we opened, we had a lot of positive momentum in the market. But then right around 11:30, we started to dump and we traded much lower. In the end, I believe we're about flat. And you can see last minute we popped up a little bit in the QQQ. We ended just above the EMA 20, which is really interesting. So right on top of some support right there. But let's take the wider perspective first. On a daily basis, you can see that at first we traded back up here almost to the highs that we saw on Monday. But by the end of it, we closed near the bottom and right above the EMA 8. So really, we're still just chopping sideways. So despite all the excitement and extra movement because of NVIDIA earnings and the GDP report, it really just amounted to just chopping sideways still. And you can see we still have very low volume. The volume today at 31.04 million. So similar to yesterday. But by the time we got the dark pool and dark pool stuff, then we might be closer to 40-ish million, but still very low volume. So the institutions did not come out to play, at least not in force today. That probably means they're not coming out tomorrow. We do have the holiday weekend, and yes, we have the PCE, but we didn't really react to Jackson Hole. We didn't really react to NVIDIA. We didn't really react to GDP. So are they really going to react to PCE? Probably not. So Monday, the market is closed. Tuesday, people are still going to be on vacation. Wednesday, maybe we start getting people back. But if we look ahead to the economic calendar for next week, there's, if I remember correctly, not much going on still. PMI, but PCE is a lot bigger report than PMI jolts and job openings. Okay, that's interesting, but it was nothing compared to Jackson Hole. And then we've got again PMI and then non-farm pro. Okay, so on Friday we get the employment situation. This is going to be a little bit more major of a report, and this is the first time next week that we have some potential for heightened volatility or institutions coming back, because the employment is starting to get more attention, more so than inflation, because of the numbers that we've been seeing, but also because we had that big revision the entire time, the last few years, the current presidential administration and the Fed has been saying, our jobs are doing great. Our jobs are doing great. We have a soft landing. We managed to get out of this without hurting jobs. Jobs are doing great. We're increasing jobs. And then we get this huge revision downward, 818,000. It's one of the biggest downward revisions in history. And that basically says, oh, whatever we've been saying is not true, whether they were deceiving us or lying, or they just had really bad data. The fact is that the job situation was nowhere near where they thought it was going to be. And to start cutting rates right now may not be the right solution. The other thing is today we got the GDP report, and GDP is saying that, hey, we got 3.0 growth versus 2.8 last time. Our GDP, we're growing our economy. So if I cut rates, that's stimulating the economy, but our economy is doing just fine. It's growing just fine without stimulation. So why do we need to stimulate? Because if we stimulate, then that could start bringing inflation back into play. So that's not really what the Fed would want to do at this moment in time. So we'll see. Actually, I didn't even look today. I probably should have, but I didn't look at this tool, the Fed Watch tool. So let's see how that's looking after the GDP. Not that different. So it looks like pretty much the same. Let's see what bonds did. Bonds came down a little bit, not a huge amount, but it's about even. with the open of 2 days ago. So it did come down a little bit, but nothing significant. So everything's still in this wait and see sideways chopping mode. So where do we go from here? Well, we're just chopping sideways, and realistically, we're probably going to keep on chopping at least until next Friday, and maybe even all the way until the September 18th rate hike decision, or rate decision, I should say. Neither cut nor hike, just a rate decision. So that has the potential to be sort of like Jackson Hole. If they do cut 25 basis points, then the market will probably just say, okay. And then if they cut 50, then we'll probably go up. And if they don't cut at all, we're probably going down. So we'll see. We'll see what happens. My opinion this entire time hasn't changed. It's still that we probably have a 20% chance of any sort of cut, whether it's 25 or 50 basis points, and about an 80% chance that 80% chance that they're just not going to cut rates at all. So that means, at least from that perspective only, we do still have downside risk in this market. So hedges that we might have in place, we might want to keep them in place, we might want to refresh them, or we just want to maintain a very neutral portfolio. We don't want to get overly excited. We don't want to say, hey, NVIDIA's behind us and we got the all clear to trade. And actually we don't, because in QQQ, it actually came pretty much flat from yesterday, just a tiny bit lower, sitting right on that EMA 20. But we did break the MA 50. And if we break this EMA 22 as well, if we break the EMA 20 as well, then we're probably coming right back into this 455 to 450 area, maybe all the way down to 440, depending on how bad it gets. So we definitely want to be careful if we do go long. So if we maintain a neutral portfolio, we do have longs and shorts, but we would be very careful about going long anything technology related. So let's take a look at those sectors, the sectors that we might be comfortable going long with. So where's my stock fetcher? I don't see it. Okay. So the ones I would be comfortable with are gold is looking okay as long as it can break the highs right here. But it looks like it's developing that triangle and getting squeezed to the upside. So gold is actually looking pretty good. So we're kind of this flat area, but the EMA 8 keeps pushing it upwards. So we've got a wedge forming right there. If we can break above, then gold will do quite well. You might want to go into an individual name rather than the ETF. So something like Newmont Mining, or that looks like a very nice uptrend, a nice little pop today. GDX is the gold miners. So they're bouncing off of the EMA 20 over here. So something like Newmont Mining would be more of a GDX, a gold mining stock, rather than pure gold. So that's looking pretty good, which is defensive, by the way. SMH not looking great. XLU looks pretty good. Yep, bouncing off of the EMA 8. And if it can break above these highs, then great. But this would be a reasonable entry right now, would be just fine. Home builders, no. Okay, it's okay, not great. ITA looks great. Defense sector looks like it's really doing well and maybe starting to go parabolic, but it's got at least a couple of days, it looks like, before it might fall back down, but it might get overextended. So ITA is a good place. So for example, Raytheon, RTX, I think. RTX, not Raytheon, but RTX, right? RTX, that is starting to go parabolic for sure. Lockheed Martin, okay, that is starting to move upwards. So those are looking very good. And financials looking great. I would say that it might be overextended. You can see that I drew these lines right here. I say you might want to wait for a pullback before entry. So if we get a pullback, this would be a strong entry. But right now, the only reason is because look how sharp this slope is. At the current view, it's about 45 degrees, but this is pretty sharp. It hasn't had many pauses on the way up and no mean reversions. So XLF is looking very good, but I'd be careful. I would look for better entry or individual stocks that have a or closer to EMA 8. So let's try JP Morgan. JP Morgan, if you caught the low today, would have been excellent. Goldman Sachs. Goldman Sachs is looking pretty good. Just bounced off of the EMA 8. So I'd be more comfortable in an individual name like Goldman Sachs rather than the ETF. Real estate looking it might be okay, pulling back to the EMA 8. Yeah, so real estate looking like it could be a good entry. I would just wait for a green bar for confirmation. And industrials looking good. Yep, industrials looking very good. Basic materials looking good. Consumer staples looking good. Hold back to the EMA 8. So again, we just wait for a green bar and it'll look perfect. Communications broke through the EMA 8 for the last 2 days. It's curving down. I would wait for the EMA 20, see if the EMA 20 holds. And then healthcare. Healthcare is looking very good. If we had caught the low of today, that would be best. And that might be it. Everything else I would avoid. So, or maybe consider to the downside. So we just want to maintain neutrality throughout this period and just be very judicious about the stocks that we select about going in. So let's take a look at what happened with NVIDIA, since that was all the big rage. So NVIDIA actually, when we opened, it was here. It did open down and then it traded up quite a bit and before breaking back down. So it had a similar trajectory to the overall markets. Let's take a look. Yeah, so shot up at the open, then traded down, recovered some, and then after that, it was down the entire day. So you might have gotten caught by this, but if you had maintained a put position throughout the day, you would have done quite well. Let's see, what did we end up doing in our option strat? I don't remember. I think we did an SMH. We did SMH, then it didn't actually end up bleeding into the sector, or at least not too much into the sector. So yeah, as we did the SMH. So it's down, but you know what? Oh, so we did the August 30th. So I would just take this off right now, take the 50% hit. If you had chosen this September 20th one, then you're in better shape. And this could still, we did end up lower today, down 1.24%. This could continue. We are breaking that VWAP line right there and all of these moving averages. So we could be on our way down to 224, 225, or even down to 215. So I'd be very comfortable holding that for even longer. So even if we're not quite in profit because we had that volatility, we may have gotten a little bit of volatility crush. And so you might be break even or slightly down on that position. But if we just hold and this downward movement keeps on developing, then you'll break even quite easily and then go into profit. So that's still appropriate. That's one, and it was a tail risk trade, remember. So this is one that we can hang on to and it can go into profit pretty easily. But NVIDIA is interesting because it did break these. And so it's probably heading lower. But the reason why I drew these arrows like this is because when I went and I looked at the gamma exposure on everything, I don't have it. Maybe, let's see. What I see is that there's a large expiration. So when you see this this exposure goes positive after Friday. It goes much more positive after Friday. So we see these red spikes down here that all expire on Friday, but we have these blue spikes that continue after Friday. So that's why this exposure is going more positive after Friday. So what could happen, doesn't have to happen, but it could happen that we keep on moving down to 115, and then all of this exposure expires on Friday, and then we pop back up to 130. So I wouldn't count on NVIDIA keep on moving down, but it could trade down to 115 and find that support there and trade back up to 130, which would be back to these highs. And then we'd be like, oh, that was their earnings blip and we're just trading sideways. We'll see. We'll see if that develops. But if we have direct puts or direct shorts on NVIDIA, it might be time to close them tomorrow. Okay, so I think that is going to be about it. Yeah, focus on those more defensive sectors, just high quality stocks like Procter and Gamble is trading a little too messy. Coca-Cola is looking great, but not a great entry at the moment. We would wait for a pullback. Things like Clorox. Clorox is pretty good. It's got that momentum. You could wait for a pullback or trade sideways, but it's maintaining its distance from that EMA 8. So this could just be, if we're only doing it for a few days, then we could just see if that will continue moving upwards. And then the Colgate, that was one that we were in earlier, and that we caught this nice move up here. We missed this move up here because we already hit our target. And then it's looking like a pretty good entry again, especially if it pulls back to that EMA 8. But today is not a bad entry. So we really just want to look for the XLP, XLU, XLV, the more defensive ones. If we wanted to get a little bit riskier, it did look like XLI and XLB were looking pretty good. I'd be a lot more comfortable if they didn't have these huge wicks at the top, but they are overall looking pretty good. So maintain mostly neutral portfolio. If you want to go a little bit bullish, make sure that you're more in more defensive sectors rather than the tech and high risk sectors. XLY was didn't just chop sideways. Earlier in the morning, it was doing quite well. If we look over here, we can see that early in the morning, SMH and XLK were leading. And this was, what's this one? Home builders, that everything was mostly middle of the road. It's just that SMH and XLK were leading. And then midday or mid-morning, that really started to change. Here we go. You can see that around 10 o'clock, the SMH really started to break down until finally it was leading towards the downside. And then you can see that by the end of the day, it was not doing very well at all. So there is pressure in SMH, so I'm very comfortable holding that put. And I would not want to be going into XLK SMH right now. And then, of course, if you're just kind of matching the S&P 500, why bother? Just buy the S&P 500. So you would want to look for those sectors that are outperforming. Today, that was XLF, XLE. I wouldn't go into XLE right now, and ITA. So ITA, XLF. So those are also very good sectors that we identified a little bit earlier. XLF might be getting a little overextended, but ITA is looking great. So just stick with those defensive sectors and you'll do just fine. So that's it for today. I'll see you tomorrow morning, and maybe we'll focus in on a little bit of day trading because we're really just expecting chop sideways. All right. So have a wonderful rest of your day, and I will see you tomorrow morning.